Hey, we are here talking about very interesting things, and we are glad that you are here. We only have this lecture and next lecture, and then we are done. It's kind of getting sad, isn't it? Okay. I feel like you are like a child getting ready to leave my home, and I need to bestow my words of wisdom to you before you make your departure. We were talking about something in class before the camera started rolling. I have a friend of mine, actually he's a son of a friend of mine, but he's 24 years old, and he was trying to make dinner plans with about 6 friends, and he said, and this is what he said, this is impossible because everyone in my generation, it's impossible to make plans with because nobody will ever commit to anything. And you guys generally agreed with that? Yeah? Yeah. I spend a lot of time with your generation, and I love your generation. One thing I think is great about your generation seems to have a greater sensitivity towards like social injustice and those sort of issues. My generation was kind of greedy and selfish. We didn't care about those things as much. But I hear a lot of you guys doing some really cool things with charities and community service and those sort of things. But one thing I want to notice about your generation, and I'm going to tell you this because this is a way you can differentiate yourself in the marketplace and amongst your social peers, okay? I'm giving you advice before we leave. Here's a way to differentiate yourself. Be the sort of person that if you commit to something, you are there. Your word is your bond. Does that make sense? Okay? True story. My wife and I used to have students over to our house for dinners a lot. Okay, my wife would make them make dinner, and we'd have like 4 or 5 students over, and we'd have dinner. And we finally stopped doing that. Do you know why?
People would never show up.
Because 20 minutes before dinner started, my phone would start, the texts would start coming in. And people would start saying, oh, I can't make it, I'm sorry, I can't make it, I'm sorry. One night she made dinner for 6 students and 1 showed up. And I finally said, that's it, no more, we're done. And I tell you this because this really is, I want to tell you guys things that I think will be helpful to help you differentiate yourself amongst your peers that you apply for jobs with and that you're on the job with. But be the sort of person that if you commit to doing something, your word is your bond. You're there and you're there on time. It really makes a huge difference. Does that make sense? Okay? So I know some students that are like that, and it's just great. It's just great to deal with that. So some words of wisdom before we start talking about accounting, okay? All right, we only have this lecture and next lecture, okay? I want to talk about a couple of things as we wrap things up. Last time I'll give this out, but I get emails from people sometimes saying, how do I know if you make new videos ever? Take a look at this. If you're on Facebook, I set up a page on Facebook, and you can go to that if you are on Facebook, and you can like that page if you'd like. And when I do new videos, I will make announcements on there, or sometimes I even post the videos on that website. So if you're on Facebook, feel free to go do that. That's the best way to know if there are more videos being developed in the future, all right? Speaking of the future, we have a final coming up, right? Let's talk about the final exam a little bit. And there is a lot of material. You can show this while I'm talking. There's a lot of material on this final, okay? I mean, you think about it. All that CVP stuff, you know, the contribution margin income statement, being able to calculate break even, being able to calculate the amount of sales or units to achieve a target net income, margin of safety, all the sensitivity analysis, which was if you change this variable, what does this variable do? Remember that sort of thing? Okay. All of that is on there. Now note 2 things from chapter 21 that are not on the final. And that is high-low analysis and degree of operating leverage. Okay. That's not on the final, so you don't need to know that. Okay. In regards to chapter 22, we have all those budgets. Remember all that fun stuff? Okay. You need to be able to do those budgets, okay? So take a look at the homework that we have done. We did sales budgets, production budgets, purchase budgets. We did a budgeted income statement. We did a budgeted balance sheet. We did cash budgets, right? Okay, I think those are the main ones. There might have been a few others. Okay. And then in regards to chapter 23, be able to understand and prepare a flexible budget and why it's superior to a fixed or static budget. Be able to calculate your direct material and direct labor variances and interpret them. We still need to talk about some of these things. And then understand the difference between ideal and practical standards. We talked about that last lecture. And then one thing I don't want you to forget. Do you remember how I had that little session where we talked about the long-term notes payable? I think we did an auto loan and we calculated the payment using a time value money table. Remember that? Okay. That's the only thing you need to know from chapter 14. Okay. But you need to know that little subject. Okay. I think that was back in lecture 234 and the beginning of 235. Okay. So make sure you know that note payable stuff. Cool? Any questions on the final? The best way to study for the final is not to wait for the night before and then try to dive into, 3+ chapters, okay? The best way is, if you have 6 days, look through the first half of chapter 21, redo that homework, see if you can do it. And then tomorrow maybe you do the second half of chapter 21. And next night, the first half of chapter 22, okay? When I was a student and I waited till the last minute, I'd always get real panicky, okay? So you don't want to do that. Remember, the best way to know if you are ready for the final is, can you do the homework? Can you redo the homework? Okay? Cool. Any other questions on the final? All right. How was the homework? Was it a lot of fun? Okay, let's take a look at it. Okay, we had some direct material variance stuff, did we not? Okay. I think we had this problem right here. Is that correct? See if I can zoom in a little bit there. Is this the one you did? Okay. All right. Okay, I won't read through that. You've read it before, but let me show you the answer and then I'll kind of talk through it. Okay. Here is the answer. All right. And I didn't ask you to calculate the total variance, but if I would have, it was 3,550 favorable, which is just the sum of these two, since they're both favorable, or you could have just compared that number to that number. All right? Where do we get this information? The actual quantity is 5,000. That's right there. The standard price is $7.50. That's right there. There is the standard price again. The standard quantity, it says we should use 7.2 pounds of material H for every unit we produced. We produced 700 units, so 700 times 7.2 is 5040. Is that correct? Okay. Make sure these three numbers are all kind of in the same ballpark. Okay. If they're not, a lot of times you've made an error. I didn't figure out the actual price here. I could have, okay? But I knew really the only reason we needed it was to get this number, and they gave us that number, 34250. You with me? Okay, cool. Any questions on that? Did you guys get that? I think I had the check figures at the bottom, did I not? Okay. All right, let's take a look at the next one, the Duval Company. All right. Here is the answer to that one. Okay. Let's see. Actual quantity was 832. It says the activities show usage of 832, so that's where we got that. Once again, we don't need the actual price because they gave us the actual quantity times the actual price, 798.72. Actual quantity again is 832. What's the standard price? $1 a liter. Right? Okay. Standard price is $1. The standard quantity, where do we get 784? Well, they're saying our standards allow for 4 liters of direct material per unit of finished product. Okay, so we completed 196 units. So 4 times 196 is 784. Is that correct? Okay? We have a favorable here because, well, if we'd have figured out our actual price, the actual price we paid was actually less. Did anybody figure out that actual price?
Like 96 cents.
0.96 or something? Okay. So our actual price we got it for was less than our standard. So that's favorable. Okay? But we have an unfavorable variance over here, right? Why? Well, because the actual quantity of direct materials we used was 832 for that amount of output, and our standards say for that amount of output we should have only used 784 liters. You with me? Okay. And of course, if I asked you to figure the total, well, you got a $48 unfavorable variance and a $33.28 favorable. So who wins out? $14.72 of unfavorable. Is that right? Okay. All right, questions? Questions on that? Okay, hey, here's a real, do you have trouble at all figuring out what's favorable and what's not favorable? At all? Here, let me tell you a stupid little trick that I developed when I was in college, when I was a young boy, okay? Can you show me and this screen? Yeah, you can? Okay. When you're looking at any two numbers, if the number on the right is higher, it's favorable. And how do you remember that? Oh, right, it's favorable. Isn't that kind of dumb? Okay. It's silly, but it's served me well over the last 30 years, okay? When you're comparing any two numbers, if the number on the right is higher, it's favorable. All right, it's favorable. What about these two? Is the number on the right higher? No, it's unfavorable. Okay? You with me? You'll use it. You laugh, but you will use it, okay? All right, questions on any of the homework? Okay, what I want to do here is let's take a few minutes and do another one in class. Let's go ahead and do exercise 23-8. Exercise 23-8. I'm going to go ahead and put that on the screen here. Okay, exercise 23-8. While they play that music, notice that they have one of the check figures for you right there. But let's do exercise 23-8, Heart Company, while they play that music, and we'll come back here in a few minutes and go over it. All right? get it? Let's take a look at the answer, okay? Okay. Take a look at, I won't read it to you since you've just read it, but this is the answer, okay? Now, once again, you can see that there is a way to do this using these formulas. I don't use the formulas, as I mentioned last lecture. I like to kind of use these brackets, okay? The actual quantity was 22,000 board feet. The actual price was $12.10 per board foot. I don't remember if they gave that to you, if you had to calculate it. Did they give it to you or calculate? Okay, had to calculate that. The standard price was $12 per board foot, and the standard quantity is 24,000. How did we get that? You use 8 board feet per unit produced, and you produced 3,000 units, is that correct? So that's where you get your 24,000. That's the SQ is the one that people have the most trouble getting, okay? And I always kind of use that verbiage. Our standards say we can use 8 board foot per unit, and we produce 3,000 units. 8 times 3,000 is 24,000 board feet, okay? Is the number on the right higher? No, it's unfavorable. Is the number on the right higher? All right, it's favorable, okay? Or if you want to be mature about it, you could just say this is unfavorable because the standards allow us $12 per board foot and we paid $12.10. And this is favorable because we were more efficient with our raw materials than even our standards allowed. Again, this is a practical standard. Okay, so it allowed for some, you know, it allowed for some errors and, you know, just like with the tiling example. Okay? All right, any questions on that? You think we'll have one of those on the final? Yeah, do you think you need to memorize these brackets and how to compute these things? I had a student come up during the final once and he said, hey, I can't remember how to compute those variances. Can you draw that bracket for me on my final? And I was like, no, I can't. That's something that you should have known how to do, okay? So make sure you understand that, all right? Okay, let's switch gears here a little bit. No questions on that one? Okay. Let's switch our gears, and I want to talk a little bit about direct labor variances. Direct labor variances, okay? Now, this is going to seem very, very similar, and as a matter of fact, I kind of want to just modify what we have been doing to direct labor, and you'll see how similar it is, okay? All right. This is the brackets that we have for direct materials. Is that correct? Okay. Well, let's do the brackets for direct labor. Okay? Let's do the brackets for direct labor. Okay. Now, this all pretty much stays the same except we tweak the terminology a bit. Okay? We don't use the term price in regards to labor. If you have wages, I wouldn't say, what is your pay price? What would I say? What's your pay rate? Okay? So this is, we don't say actual price, we say actual rate. We don't say standard price, we say standard rate. We don't say standard price, we say standard rate. Okay? And this is no longer a price variance, it is a rate variance. Are you with me? Okay. Now, we do it, it's a pay rate per hour, right? So we don't say what's the actual quantity, we say what is the actual hours that were worked. So we don't say AQ, we say AH. We don't say AQ, we say AH. We don't say SQ, we say SH, okay? And we don't call this the quantity variance. You know what we call it? We call it the efficiency variance. You with me? Okay? Does that make sense? Okay? Now, and if you look at if you look at the computer, the next slide, you can see that that's what I just did right there. And again, I focus on the bracket part of it, the top half of it. Okay? Does that make sense, folks? Okay, now what I want to do is, do you remember when we did this demo problem? We did this demo problem right here. We did it for direct materials, right? Okay, now I want to do it for direct labor, okay? So let's do this for direct labor, okay? Okay, and I'm going to highlight what we need in regards to this example for direct labor, okay? All right, we need to know that they manufacture tables. XYZ company manufactures tables. A standard cost card for the manufacture of one table is below. Shows the following. Okay, direct labor, the standard cost per table for every table you produce, it should take 2 hours, okay? And the standard rate we should be paying is $8 an hour, okay? In November, the company produced 1,000 tables. We need to know that. Actual production took 2,300 direct labor hours. Again, we're just focusing on the labor, so we don't need this information there. And we need to know that the workers' average pay was $7.80 per hour. So now we're going to calculate the direct labor variances. Are you with me? Okay, let's do that. That'll be fun. Okay, let's go ahead. Let me zoom out here. Let me draw the brackets real quick. This is the rate variance. This is the efficiency variance. We're going to compute a number here. We're going to compute a number here. We're going to compute a number here. Okay? Well, this number will be the actual hours times the actual rate. This will be the actual hours times the standard rate. And this will be the standard hours times the standard rate. Are you with me? Okay? All right. So, well, let me see here. What variables do we need? What variables do we need? We need actual hours, standard hours, actual rate, standard rate. Okay. Anybody see one of those?
2,300 is the actual hours.
2,300 is the actual hours. I concur.
780 is the actual rate.
Mm-hmm.
The actual rate is $7.80 per hour. Okay, good.
And the standard rate would be $8 an hour.
Standard rate is $8 an hour.
And then the standard hours would be 2,000, because it's 2 hours to complete one table. You did 1,000 tables.
Right. Let's talk through that. That's good. Our standards say it should take 2 hours to produce one table. We produced 1,000 tables. So it should have taken 2 times 1,000, 2,000 hours. Are you with me? Okay, so now we have our variables, do we not? We have our variables. Okay, so now we can go to this thing. Actual hours is 2,300 times our actual rate of $7.80. Actual hours are 2,300. Our standard rate is 8. Standard rate is 8. Our standard hours is 2,000. 8 times 2,000 is 16,000. 8 times 2,300 is 18,400. 2,300 times $7.80 is 17,940. What's the difference between these two numbers? Well, the difference between those two numbers, I believe, is 460.
Favorable.
All right, it's favorable. The difference between these two?
2,400.
2,400 unfavorable, correct? And then if you wanted to do a total variance, that would be, I think, 1,940 unfavorable. You with me?
Do we not need to do the total variance?
Well, sometimes. I'll tell you why we do the total variance next lecture. That'll give you something to look forward to. But you'll see why I'm doing that when we start talking about the interpretation and analysis of this. Okay? Good question, though. Okay, does that make sense? Okay, let's do one. Let's do one in class. Okay, and what I want to do is let's do exercise 23-5. Let me see if I got that. Okay. Exercise 23-5. Now, let's take a look at that real quick. This is exercise 23-5. Okay, you can go ahead and try to do the whole thing, but let's at least try to get through. They ask you to compute the variances for each of the 2 months, October and November. Try to just get October done, okay? If you get done with October, by all means do November. That'll be part of your homework assignment. But at least in class, let's try to do the October direct labor variances. Does that make sense? Work on that, and folks at home, I'm going to put some check figures up on the screen here in about 30 seconds, okay? So do the October direct labor variances for this exercise right here while they play that music. All right, let's take a look at the answers, okay? Okay, let's take a look at there, zoom out a little bit. Okay, now this is, I only asked you to do October, is that correct? Okay, so, we've got 3 bubbles. We'll put a number in each bubble. We get this one by taking the actual rate times actual hours times actual rate. This is actual hours times standard rate. This is standard hours times standard rate, right? The actual hours of 16,250 was given, right? There's actual hours again. The actual rate we had to compute, right? Didn't we take 247,000 divided by 16,250 hours? Is that correct? Okay. The standard rate is $15 per hour. That was given, wasn't it? Okay. And then the standard hours, what'd they say? They said we're allowed, our standards say 3 hours per unit, and we produced 5,600 units. So 3 times 5,600 is 16,800, right? Compare these two numbers. Okay, that is unfavorable. Why? Well, because our actual rate we paid was $15.20 and our standards say it should have been 15. Okay, so it's unfavorable by 32.50. Over here, this is a favorable efficiency variance because we produced that amount of output in less time than what our standards even allowed. Okay? Does that make sense? So 82.50 efficiency variance, 32.50 unfavorable rate variance, totals up to 5,000 favorable total variance. I didn't ask for that. I don't know if I did or not. It might have asked for that. But. Okay, any questions on that? That was for October. Cool? Okay. Any questions? All right. Okay, well, here's what I want you to do for homework, if there's no questions. I want you to start studying for your final, okay? I want you to do this whole sheet that says, and you should have this in your handouts, direct material, direct labor variance handout, okay, for Air Meals and Sani Company, okay? So do this entire handout, but I also want you to do November for exercise 23.5. Do November. We just did October, right? Maybe you've already done it. Maybe you had extra time and you did it. But go ahead and add that to your homework assignment to complete exercise 23.5 and do the November variances. Cool? And then this entire handout. All right, any questions? Only one more, okay? There'll be a lot of tears next time, a lot of hugs, I think. Don't you think, Jeremiah? I know. Don't cry. You can always just watch a video and it'll be like I'm there again, okay? Hey, I will see you guys next time for one final lecture. Do your homework and be checking that red calendar all the time online, folks, for due dates. We'll see ya. Bye-bye.